Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Monday, everybody. Great to see everyone. We had our weekly Sunday evening show last night. You can check the replay out over at the Simpler Trading YouTube channel. And today we're going to take a look at just kicking things off with the economic calendar. The calendar is pretty quiet. We talked about this yesterday as well. So to reiterate, the calendar is pretty quiet. We do have Williams at 2 p.m. today. So there's a hot zone for the second half of the U.S. session. Tuesday, really not a whole heck of a lot at all going on Tuesday. Wednesday, this is where things start to heat up. We've got CPI numbers coming out. Remember, anything that has to do with inflation, growth, and jobs are all going to be really important hot zones that the Federal Reserve is watching, that we know they're watching, and then will ultimately map to their monetary policy messaging and then ultimately their monetary policy actions. So a lot to keep an eye on starting on Wednesday, and it really doesn't let up. We move on then to Thursday and our weekly jobs number, our unemployment claims number, but PPI, another hot zone to watch. And then Friday, core retail sales. And this is not exactly inflation or jobs or even growth. I'd probably put it under sort of the growth basket a little bit more with a little bit of insight into inflation. But core retail sales is consumer behavior. And consumer behavior is still going to map in many ways to what it is that we as traders and investors and the Federal Reserve will be looking at in terms of the psychology of the market. And then you then follow that up 90 minutes later with the University of Consumer Sentiment, University of Michigan Consumer Sentiment. You've got a pretty interesting 1-2 punch for how the consumer is doing in this inflationary environment. So somewhere kind of a foot in both camps of growth and inflation, maybe a little bit more inflation, but it is going to be watched. Wednesday, Thursday, Friday, we've got a lot of hot zones coming up. All right, so with that being said, there's a second calendar we need to start talking about a little bit more, and that is the earnings calendar. And if you haven't yet, now look, there's a lot of earnings calendars out there. I like to use the one over at Estimize, E-S-T-I-M-I-Z-E, Estimize. I like theirs quite a bit. And the thing I like about it is I can track, you can see there on the left, I know it's a little bit fuzzy. I have my dark reader on here. There we go. That might be a little bit better. See right there, I can actually follow the symbols that I want to watch. And even more importantly, I can take a look at what's going on in terms of expectations for earnings per share and revenue. We can see the trend as easily as we can read any graph. And we can also look at what is imagine, has anyone ever bought anything on those crowdsourced services where someone has an idea and they crowdsource a Kickstarter? Has everyone ever seen that? And it's sort of, if they can raise the money, they know there's interest. So we see this sort of crowdsourced opinion. Some of you might know what I'm talking about. Well, imagine sort of Kickstarter-ish crowd psychology that's being baked into what there is two kinds of consensus, right? There's what the street thinks, Wall Street, there might be company guidance. And then there's sort of this whisper number. This whisper number is this crowdsourced thing. You've really got to understand the whisper number, the consensus, if you're going to play earnings. We'll talk a whole lot more about that in the Sector Secrets room as we go into earnings season. But think about what calendar you're using, and does it give you a good idea of not just the trend, the typical trend, but what that sort of whisper number is. And there are other sites. I just happen to think the whisper numbers on Estimize just happen to be the best. And by the way, there is a free version of the site. You don't have to subscribe, although I've been using the site for many, many years as I try to understand what the reactions to earnings are going to be. So we have a couple calendars to take a look at as we go into the heart of earnings season once again. All right. With that being said, of course, this show is about your questions. Thank you as always for them. Thank you as always for being a part of the Caffeinate and Dominate crew. So let's go ahead and jump into those questions, shall we? And I'm going to switch this on over to the S&P, see what we've got going on. What are my thoughts? Hey there, Gwen. What are my thoughts on MU for a short the rip? All right, let's take a look. MU. Let me make this a little bit bigger down here because, so let's talk a moment about structure, market structure, right? What is that? How do we measure that? We talk a lot about that in the rooms. Structure dictates strategy. Strategy dictates indicators. Remember those three things. It does not matter what style of trading you like. That is going to be always the process. Structure dictates strategy. Strategy dictates indicators. Most traders do the opposite. They've got their favorite secret squiggle and they slap it on everything, right? Structure, and for those of you thinking, all right, Rog, well, how do I measure that? How do I measure structure? How do I know if we're moving in a good uptrend or downtrend, if we're in chop or if we're in a narrow range? Well, most of you have this tool, and that's going to be the trade flag. Start there. If you're a member of any of the Simpler Trading rooms, you have access to my free layout in the room drive of each one of the rooms: day trading room, options room, futures room, as well as, of course, my Sector Secrets Mastery, where y'all get a hopped up version. Now, red grab candles, uptrends cannot have a consistency of red grab candles. So, Gwen, awesome. This is absolutely a short the rip possibility. Yes. Those of you that have the multi-chart, whether you took my recent day trading class where we have live trading in 13 minutes, or whether you're part of the Sector Secrets Mastery and you have the multi-trend, which is the history of this thing. And whatever this is plotting, this just keeps track over time of what those reads were. This is how we find strategy, our strategy, by first identifying the structure. Downtrend, red grab candles, multi-chart is red. We're south of the 200. So absolutely, remember, structure. You have the tools to do it already. Really, really easy. Now we're trading up into the 21 exponential propulsion, which I love, right around 59.5. Wave is heading lower. That's your reversion to the mean. The wave, the 34 EMA on the high, the close, the low. That zone is the mean in my trading. 21 is an aggro entry. Wave is bam. That's my meat and potatoes in a trend. So I like it. Look for those zones, and structure dictates strategy, gang. Always focus on the structure first. And if you don't have a tool to identify trend, right? So let's talk about what is it that we're looking at? Sentiment. How are people thinking? Momentum. Well, if enough people think a certain way, we start to see a push higher or lower. That's momentum. If the momentum persists, the result of people thinking a certain way, acting, reflecting what they're thinking, and just looping, right? They're persisting with that. There's your trend. You look at sentiment, momentum, and trend, that's your structure. How do we measure that? Grab candles, wave, multi-trend, trade flags, whichever ones you have, use those in combination and you're all set. So great, Gwen, excellent. It is absolutely a short the rip. So love it. Raghee, thoughts on China's drop and any expected effect on our market this week? Well, we always want to be clear on what's dropping and whether or not we're seeing the likes of, how are we measuring this? All right. Is it the MCHI or the FXI ETF, which reflects China? Maybe it's EEM, even though this is generally considered the emerging markets ETF. So think about China. How do we measure China broadly? FXI, MCHI, or EEM? All right, EEM is heading lower. FXI, MCHI, and even KWEB. KWEB, again, structure dictates strategy, right? Not news, not hot zones. This is generally trying to move higher, and take a look at the structure. green momentum. Green, I mean, it can't be any easier than this. Gang, there's no easier way to understand momentum and trend than just color coding them using the 8, 13, 21, and 34 EMAs. That's the fuel of this approach. And it works really well. I mean, I've got decades of saying, you know what? Regardless of what the markets are doing, low volatility, high volatility, hawkish, dovish, whatever, this just flat out works. So now I know we're kind of heading in a higher overall market. And I just don't see, we're going to be opening around 30, 80, 31. We're inside the wave. So yes, a little bit of weakness, but not enough to say that this is undoing what has been a pretty decent bullish move since about the 21st of June. So keep an eye on it. Consequently, I think a lot of people are going to be thinking about whether or not this is a downtrend. This is an uptrend. So this is maybe a uptrend under pressure, but it's not a downtrend. Remember, again, bearish momentum doesn't mean it's actually a bearish trend. So maybe see how the dust settles and go from there. So, all right, hopefully that helps. Start with the structure and then determine where you want to take advantage of this narrative, because only EEM is heading lower. All right, next up, Mr. Walker clicked the like button. I appreciate that. Thank you very much. Do I still use limit orders for entries when day trading options? Yes. I still use limit orders. Yes, absolutely. I still want to use conditional orders. Jay, yes. Raghee, do I still check currencies to help determine risk appetite? So do I head on over to FinBiz, FINBIZ, and look at the one-day relative performance? Yes, it's usually on one of my screens somewhere. What would I say about today? Slight risk aversion. Weak Aussie, but then you have this weak-ish yen. What is this really? What is this narrative really? This is a strong dollar. Dollar is just stronger than everything. This is mixed at best, mixed with some slight risk aversion. And that's by looking at mostly the yen and the Australian dollar. So yes, I do. All right, next up is Natty Gas, a good short candidate. Yeah, I have after, I will say this, after the whole that terminal, the export terminal issue, after all of that, I kind of left Natty alone. And the reason for that is with our Freeport terminal, first it's 21 days and it's 90 days to a partial open, and all the narrative around when they're opening and the supply that's sitting there, and the bearishness that the market really, meaning market participants really then started to assume, factor in, discount. We have now, to your point, Fred, it's a downtrend. Yes, it's red over red, Momo red, trend red. Gang, this is as easy as it gets to read momentum and trend. And when we see the red grab candles echoing what we're seeing there, it's kind of hard to miss, right? There's no secret squiggles we have to look at. Everything's going to be pretty clearly laid out for, as you noticed there, Fred, yeah, this is going to be short the rip. I don't love this narrative, though, and here's why. Technically, yes, this has turned into a downtrend. But realize that one headline, one session where the Freeport terminal news is maybe better than expected, that's when this could gap up and just run. So remember, this is not a downtrend that is sans any major impactful news. It's all news driven, and it's that Freeport export terminal. If we get better news about that, this could be a very unpredictable downtrend. And downtrends are generally difficult anyway. This could be even more difficult. So be careful about that and realize if there is anything that could be a problem with this trade, it's news. And it's not as if we're dealing with scheduled events. This news could come out of nowhere. Oh, Freeport's going to open sooner than expected. Freeport's going to open a little bit more broadly than expected versus the partial opening. I mean, what does that mean anyways, right? So we have a lot of news that could still affect this one in a dramatic way. Keep that in mind. This is one of the reasons where, not in the early moments of volatility, but as volatility persists and maybe trends start to shift, the why does matter. Doesn't matter right away, But as we move on with a narrative, the why does matter. And this is a really good example of what the why is and why it's going to be possibly a problem and why I'm not really looking at Natty. Do we see a short the rip on TLT? All right, let's go take a look at ZB futures, which then maps to TLT. And it's not a short the rip. No, I still like the bearish side of this market, but it's more about an overbought short. Short the rip is specifically about downtrends. And this is not a downtrend, but I like the bearish side of it. I definitely do. All right, next question. Robert asks, what tools do I use for intraday trading? Are they the same as what I would use for swing? So my approach to all trading is you have a core set of indicators. For me, that's tops, wave, grab, propulsion, Darvis, right? You throw the structure of the trade flags in there. You've got a complete tops approach. That's the foundation for everything. So weekly is going to have tops, daily is going to have tops, 5 minutes going to have tops. When it comes to intraday, however, remember, time and volatility are very important when it comes to intraday trading. They're important for all three of those time frames, weekly, daily, and 5. But the 5 is going to experience that in a much more acute way. Therefore, the clock, knowing what time it is, knowing the day trading clock, knowing those day trading windows is going to be added to that approach. Volatility by way of the HPMRs is going to be added to that approach. So I'm not replacing anything else. I'm adding to some of the nuances, again, of time and volatility, which will impact our 5 minute much more intensely. That's what I start to add to the 5. So yes, the core of my trading, the heart of my trading is always going to be the same. And by the way, gang, if you do not have a foundational set of tools by which you understand structure, right? Momentum and trend, sentiment, momentum, trend. If you don't have that, put the tops on there. Those indicators, that is a foundation, plays well with everything. So let's grab two of the most popular indicators. That's simpler. Squeeze and ready, aim, fire. If you've got squeeze actually works well in a trend that compresses. There's a way to do that with the grab candles to recognize that structure specifically. And ready, aim, fire works great in a yellow trend, range-bound market between two Darvis, right? This foundation works great with everything. And by the way, as members, you have access to it in this foundation, these tops tools in the room drives. And if you're not a member, go check out countdowntrader.com, where you can download quite a few, not all, but quite a few, wave, grab, propulsion, Darvis 2.0 from countdowntrader.com. Get that foundation on your chart and then bring those other indicators that you love to the party. You'll find, again, those indicators work really well with everything. They play well with others. So there'll always be a tops foundation on my charts. Always. Next up, Vic asks, can I check the HPMR? So since the split, Vic, yeah, that's being recalculated. And we should have that. I'll have to check with the bot. We should have that pretty soon. As soon as we have enough data to repopulate that chart, we'll bring Amazon back to the packs. If the packs are not going to reflect accurate time and volatility levels, you'll see, those of you that are subscribing to the pack, you'll see that, well, it expands. We update the levels. And I'm always looking at the accuracy and, in situations like splits. Yeah, they're going to momentarily disrupt the accuracy of the data. And then we'll just pause for a moment on those symbols. Maybe use XLY in the meanwhile. And then we'll come back as soon as the data has enough to give us those reliable volatility and time-based support and resistance levels. All right, which platform, Glenn asks, which platform do I recommend for futures options trading? TOS is fine. Yeah, TOS is fine. TOS is fine. We have a few traders that are using Tradier. I'm trying out Tradier, but TOS is fine for day trading options. I day trade with options on TOS all the time. I don't day trade futures on TOS, but day trading options is absolutely fine. Yes. All right. Is the slow stow free, or is it something we would have to obtain with a paid service? Lori, you can set up a slow stochastic with my settings right on TOS. Just go into the indicators on TOS, You can just right click the chart, get into edit studies, and or hit the what do you call it, the beaker, and go find the slow stochastic. All right, that's number one. And then once you've found the stochastic slow, right, just add it. And I'll show you what that looks like. All you need to do then, this is built into TOS, 80, 20, make sure the K is 21, make sure the D is 3. And again, you can watch the replay of this video if you want to see all the specifics. 80, 20, 21, 3. Change the average type to exponential. And if you want those arrows, which don't wait on arrows, but they are great visual confirmation of momentum as we leave overbought 80 and as we leave oversold the 20. All right. The next thing I have a lot of traders do is you can uncheck the slow K, change it to whatever colors you like. I like to make overbought red. I like to make oversold green. That's really up to you in terms of thickness and color of the lines. The most important thing is if you want to clean it up, remove the slow K, just undo the show plot, and make sure these are the most important thing, gang, is make sure these are the settings. You will then get the same readings. It's not going to look like mine because Lorna Bot has basically given me just an easier to read slow stochastic. So we've just combined a lot of things into one line. And you can get that if you're a Sector Secrets member. I give this version to you all in that room. If you just took my day trading class, you get that version as well. However, the overbought, oversold reads are the same as the slow stochastic built into TOS. I just have it visualized a little bit clearer for these extremely nearsighted eyes that have cataracts. So yes, a lot of my adjustments to charts are just so I can see them better. That's it. They're not some high-level strategy adjustments. And so that's why so much is color-coded on my screen. I just don't see that well. Doesn't stop me from trading, though. Use the colors. Colors are easy. They're very binary. Red is bearish, blue is neutral, green is bullish, and it just helps me make a quicker read without the fuzziness. So that's why I have so much color-coded stuff. All right, gang, I've run over. I've got some live trading going on. My folks in the live trading for the Day Trading Survival Guide class. We'll see you in just a moment. Everyone else, I'll see you tomorrow. Same time, same station. All right. Be good to each other.